Hi, traders. This is my weekend update on the markets, and try to keep it under 20 minutes for sure. And some base little things I'm talking about here. An amazing run in this market, and it seems like they're trying to keep it afloat here. Um, and I wanted to talk about how certain trading styles are working day after day after day after day right now in this market. And I think it has a lot to do with we've had like 22 weeks of the S&Ps not breaking out of their expected move. And I think today, this week, coming weeks, $45 or something like that on the S&Ps to the upside and the downside. And in that situation, option premium is really cheap. And in this situation, I think there is a massive um, liquidity liquidity issue in the option market right now. We've gone so long at this point that I think there's just not enough options out there to for the demand. And what we're seeing is a lot of bids up on both the put and the call side in the morning hours, making it relatively easy for traders to play both sides in the morning hours due to liquidity issues. And I think it has a lot to do with there's just not enough premium for people to write options. And for that reason, um, the option, a lot of people are making money on both sides of the game right now, and which ordinarily you wouldn't have, but given the relative strength of this market in 22 weeks, that is the situation we're under right here, right now. And until this trend breaks, that's probably going to continue. But I truly believe here in the next week or two that we are going to start breaking some levels. And one of my prior uh, uh, videos was calling for January 2nd as a blow off top, but that may or may not be the case. And I really not wanting to call the top or the bottom or bull or bear in the markets. I just want to trade the price. I want to have the right setups and just kind of focus on my setups and really not try to get caught up in the over have it be aware of what's happening, but just not let it uh, over empower my trading style. Okay, now on the possible bearish front, a situation which I'm thinking about right here, this trend line that's been established for some time here. Now, wouldn't you know it? It's not want to show up now. And go on the weekly here. Well, wouldn't you know it? I'm gonna have to do this model zoom in here. It looks like. There we go. There we go. That's from back mid 2017. That trend line, we're breaking down, pushing down below that right here, right now. And that has held for quite some time on the dollar. What this situation creates is a weakening dollar. You got all these foreign investors from, Japan, from Europe, from China, all investing in US equities. Well, if you have a declining dollar, that's a double negative if the markets decide to start selling off. So right now we haven't really seen a panic situation, but continued weakness in the dollar, or especially if we start breaking the 96.12 area on the dollar to the downside, that is going to have a major impact on our U.S. equities, which may or may not happen. But I just wanted to point that out, how the dollar could come in play in the not so distant future. The bond market caught a really nice bid last week, and for reasons that we have not tested this other VPOC, the 140.35, I'm really thinking this week we are going to see some more responsive selling towards the first of the week, in my opinion, um, as the bonds continue to catch a bid. And that could also put some downward pressure on our financials. So just keep that in mind. That is something I'm looking at right now. The profiles on the financials look solid, but that is a scenario that could happen. We do have this uptrend line, which we do have a volume distribution, so I'm not reading too much into that trend line itself. But we do have an untested. You see how we had this breakout and we back tested it once. We do have an untested volume point of control here, a monthly volume point of control down here. And actually, it's better to go on a smaller time frame. We did test that, and if I go out, 90 days, I guess, real quick here. And yeah, this stuff here doesn't matter because that's after our session. Yeah, we're still firmly inside this consolidation area. But if we were to start breaking down rapidly, breaking this trend line, which, like I said, this is not a really critical trend line, all the volumes build up here. It would take a major news event, in my opinion. But if we were to start breaking down, we're probably looking at the 3043 area. That's a massive fall out of bed for the financials if the markets do decide to start falling out of favor here. And basically, if the TLT were to get to what I was talking about, that's probably a very good target at 3043. If that TLT continues to rally, that's probably what's going to happen to the financials. Okay, something I want to point out here, and that's your TNX. Okay, and actually we are testing support right now on our yields, bond yields. So a breakdown on our bond yields, that means the bonds are going higher in price. Okay, so we are testing a trend line support as of close Friday. So that is quite interesting on that. But the main point I will point out here is where it's been trading this whole last quarter. Down here, it's not been trading up here, it's been trading down here. What's that good for? The home builders. And the reason I mention that, Lennar and KB Homes report this week. And here we are. We have an undervalued situation on the home builders. We had a very good earnings report last quarter, and we had all of those the cheaper interest rates. So this could be quite a bullish signal for the markets this week. That's why that's contrarian. I'm trying to analyze both sides of this thing. But the home builders could very easily see a nice short squeeze, in my opinion. And then KB Home, it's not quite as dramatic. But I might take some Lennar calls into the numbers. They come out Tuesday, I think. So I might I don't generally play earnings, but I might take a small position and try that. But the home builders, I'm kind of liking here. So just keep that in mind. Tuesday, Walgreens Boots, they're reporting this week. These retailers are really having troubles. They got a lot more competition from online, especially with Amazon. They got the Pillbox now. And I mean, it's a very popular service that Amazon's really promoting very heavy here. So it could put a lot of pressure on these pharmaceuticals retailers. And but I did initiate some a call position Friday, and it turned out I had a poor fill. So if I get a responsive bid there Monday morning and get me broke even, I probably will just chuck it to the curb. I'm not too thrilled about holding the Walgreens into earnings this quarter. And a lot of times the first quarter is not overly great for Walgreens, so just keep that in mind. A scenario which I'm really looking at right now, and keep in mind, January 1st, everybody's P&L across the world on all their accounts set back to zero. So a thesis that I'm really thinking we are going to see play out very hard this week, and that's many companies coming back in and retesting their 2002 opening price. So just keep that in mind as a theory that's going to develop this week. Like Tesla, I'm pretty sure this is going to be coming back in. I don't know how fast, but the way Tesla moves, there's very poor value up here at these price levels. So coming back to 424, for the opening for the year is nothing on a relative basis. And the plunge team might just keep trying to pump it up and everything like that, but it could very easily all completely come undone for Tesla. So that's when I'm looking to the short side. I'm also looking at Google, thinking that it's not performing too well here either. I didn't put it on there. Wait 1 second. Yeah, Google kind of looks like a very poor setup for Google. I know some traders in the room. They were right up here initiating some shorts there Friday, and it came in hard there on the close. So this is one I still have on watch for the um, potential backtest of the 2002 Open. And there's going to be a lot of these setting up this week. Disney is another one, which I'm pretty sure is going to be coming back in. And backtesting here. Keep that one on your watch. Microsoft's actually showing more relative weakness than the many of the other stocks. So just keep this one on watch. If for one to hit this back test, I think Microsoft's going to be one of the first ones to do so. So keep that one in mind. Amazon's testing the trend line as of the close Friday. There is some relative strength here. They're trying to build Amazon for something here. But just keep that one in mind. Very easily, 1864 area, that's just $10 to test the 2020 Open. And being right on the trend line, if we were to open with some relative weakness, this would be a very strong contender in my opinion. Facebook, as you can see, is outside the range, and it typically comes back in. So 207.13 would be a good, reasonable target for Facebook to the downside for any type of market weakness. Now, here's what I want to point out here. Alibaba is already testing that. So this is actually one of the first major ones that I've noticed that basically completely gave up that intraday action. So if we were to start seeing that rotation, like I'm suspecting, you would think Baba would be one of the first to fall out of bed. Now Baidu still got quite a bit of uh, room to come down. Just keep in mind this volume profile on this, it went straight up here. So this is almost a gap below here on Baidu. So don't get misled by that long elongated move there. There's really no price support for that move. So just giving you a heads up on that, okay? Now, I'm not going to get overly bearish on XLF, but we did close outside of this uptrend we've been in since October. We are holding out at this volume range high. We had downgrades in Wells Fargo and Bank of America last week. The analysts seem to be getting ahead of the curve with their downgrades before we crossed out of this trend line. So just keep those things in mind here, okay? And we're already trading below our open on our financials for 2020. So that's another thing. So there's a few things there I did want to point out here. You got the bonds spiking, and you got your financials showing still not positive for the year. So I'm not putting up a huge red flag. I'm just suggesting that caution is warranted. Bank of America had a closing price outside, right here at the bottom, outside, it's in an overbought, thing. But, it's not, I can't say we might be rocketing to new highs there, the bonds might come in come Monday morning, and all this might not mean anything. It's just something to be aware of, a situation developing here with the weakening dollar, and we got the geopolitical tensions and stuff. The financials are going to be what's going to cause this market to finally start rolling back over here. And this is the prior all-time high for Bank of America, and we have not had a back test yet for the breakout from the prior all-time high. And financials are definitely going to do that at some point, and it looks like we are setting up for that situation to happen here this week. Similar situation with J.P. Morgan on the trend line there. We're right there on the edge. Not quite. This one here's got a lot more value support up here. It's not something that I want to get overly bearish about, but something to a modest correction is nothing to speak of. And then you got your Citigroup here. It's crossing out sideways. It's just because you cross over a trend line doesn't mean it's bearish. It's just what's bearish about this is that it's so far above the dynamic volume profile. That's what your bearish signal is on this situation. So just keep that in mind. And we had Wells Fargo, and they had a big downgrade on Wells Fargo. So that might suggest that the home builders might be a lot worse than what I'm suspecting. You wouldn't typically think you'd get a Wells Fargo downgrade ahead of the housing numbers, but maybe I'm thinking wrong here. I mean, about the whole thing. So it's been going a lot longer sideways on Wells Fargo, so this would be the area that would probably fall out of bed the soonest. So with the home, we know the home builders are coming out this week. We know Wells Fargo is a big mortgage originator, and it's been building out sideways, possibly bull flagging, but then again, we're at the bottom of the range going into the news event. So are they just and the VIX is not popping whatsoever with all of this geopolitical and everything going on. So just keep that in mind. I don't really want to talk too much more today, but I covered a lot of topics, gave my ideas. I'm really not trying to say bullish or bearish. I'm just trying to be strategic, pick my trades, get in, get out, bank some buck, call it a day. And, that's kind of what I'm looking at here. And I've been doing exceptionally well this year. The past 2 months, actually. But this year has just been amazing. And so hopefully I can keep it up. So like the video if you like it. Please leave comments at the bottom, and follow my account if you can. And thanks a lot. And I hope I gave a pretty good overview of what I'm seeing in the markets. Thanks a lot.